What's up, guys? This is a market update for Monday, 4/20/2020. Today, we're going to talk about oil prices going negative, why you should wait on buying a car, and the overall state of the economy, and a few of my opinions. Essentially, what I want to do is be able to post a video like this once a week for you guys. I know we have a lot going on, so I'm not going to bombard your IG feed with videos and stuff like all the time. So I'll probably put a few stories up a day that are interesting, and then I'm going to be hopefully getting a video out at least once a week. That's the plan. So let's get into it. Last week, so I mentioned about cars. So the reason why you might want to wait is like kind of when I did my research and reading on it. You have like Hertz and you have like Enterprise and all those guys, those rental car companies. They manage huge fleets, and usually those fleets go to auction after they're done using it. Those auctions now are being stocked up. So when a new car is made, the 2020 models are kind of made in late 2019, early 2020, and they're pushed out to sell throughout this year. So what these guys do is they'll take their 17 and 18 cars, 2017, 2018 cars that they had that me and you would have rented out of an airport, whatever, and we'd go sell them. And, then they would buy the new ones to kind of keep things going because they're a consumer. They're a pretty big consumer of new cars. And so are we, people like me and you that might buy a new car, lease it, whatever. But, with everything going on right now, not everyone is buying cars. So what's happening is you're getting a huge supply and demand is spiking down at the same time. And so basic economics, you have supply one way, you have demand the other way. You always want to meet right there in the middle, like X marks the spot. And that terminology is called equilibrium. It's everything's equaled out. You made just as much as people are going to eat, right? Like the perfect amount of food or, cars, whatever it is, right? So it's in my opinion, probably opinion of a lot of others, that cars are going to get cheaper. Probably not your luxury, higher end, like Ferraris and stuff like that, but definitely like your average, like Toyotas and your average cars, you're probably going to be able to get them at a 10-15% discount rate around this time next year, or possibly closer towards the end of the year as they look to push off these cars, and maybe even a better deal on used cars because all those cars in the sense are financed, and Toyota, holds a lot of their own financing, but a lot of other companies don't. So the longer they hold on to those cars themselves, including, people that own like a Ford dealership, own something else, then the more money that they're going to lose. Now, cars that they know that they're never going to be able to recoup their money, they're going to try to get rid of them fast. Obviously, like Raptors and something cool like that, like they know is going to sell, someone's going to buy, they probably won't drop the sticker price on it a lot. That's the thing. So like we always talked about, bigger picture, everything's kind of connected. Now you kind of seen oil prices go down today, and everyone's like, oh shit, like how does something get negative? Like how do it's when I was looking it up too, I was like, wait a minute, what, like what the hell is going on here? And truth is, same thing with supply and demand. There's more demand of oil out there. Sorry, reverse that. More supply of oil out there right now than there is a demand for it. That's naturally once was going to cause prices to drop. Now we have another problem where it is storage. When you're producing this oil and it comes in these big barrels, they actually comes like crude oil is black, and you got to take it to a refiner, and then that refiner will refine it to be able to put in our cars so we could use. But the problem now is storage. We don't have, we're running out of storage. Everyone's kind of surpiled up. And, that was kind of a given, like we produce a lot of oil every month. And, if you think about China being down since January and then the rest of the world catching up in March and then being shut down since March, how long could you last? At first you could, drop the prices, right, to get the demand of the, of oil up a little bit, right? Because you make something cheaper, like, oh, I want some of that. But the end user is still not going to be there. So you got to store it somewhere. So you see negative prices right now because those are actual storage costs. And I know it sounds insane because it's like, how can something cost nothing, but it'll cost storage? And it's, guys, it's a commodity. I mean, that crude oil, in a sense, isn't going to go bad, and those people, they need to, get that oil away from, and, off their shores and off their docket so they could either continue to pump more. Because if they have it locked up here, they have no practical place to store it. What the heck are they going to do with it? You know what I mean? They're not going to be able to make more because they're going to have no place to put it. So in a sense, they're kind of like, shit, take it for free because we need to keep making more. And their hopes are, like we talked about in my other oil videos that I made, is like if Saudi Arabia could keep, or OPEC in general, could keep pumping out this oil, when the demand does come online, they want to have the greater market share. That's all proven now to be a dumb mistake. And it's kind of, I mean, mafia like to work as a unit, as one, because you can't really do that in any other place in our country, but I guess you can as a globalist, international. They should work together to all cut supply because this is going to crush a lot of them. And of course, Saudi Arabia's, or OPEC in general, has deep pockets. But hey, when it hurts, it always hurts. No one wants to lose a few $1 billion or a few $100 billion. Why? When you could have put that money to work somewhere else. So you're going to see these games be played out. But to me, the bigger picture is, like I said, like I look at this and I'm like, what the hell does this really mean? You could look at maybe that was just because the cop in me or something. I don't know. But like the way I look at things is like, face value is one thing, but there's always a story there. And so these were futures contracts that are going down. So we're all optimistic about the country opening up, but yet the one thing that makes the whole world go for now, which is oil. I mean, in the future, we'll see electricity, we still have nuclear power, natural gas, whatever. But for now, oil is predominantly, especially in third world countries, the main driving force of production. Because you gotta gas up your moped to get to work, you gotta gas up your cars to get to work and your trucks. So if they're saying that the price of oil in May is next to zero or going to be next to nothing, and prices are going to continue to fall, then what does that say about economic and global economic output? Then you're like, oh shit, okay, let me step back real quick. So if they're saying that the production is going to be down of oil, so that means overall production of gross domestic product is going to be down. So what does that mean? That means the overall economy is going to be down. So you got this in sight, and you see the short there, but you're looking at the stock market, and you're like, dude, you dropped like 500 points. I mean, really, for this type of news to drop that much, not really a correlation. So I don't know. Maybe I'm crazy. I'm missing something. I must be. But from my math, 2 + 2 still should equal 4. And if the fact that the market isn't reflecting what's really going out in the real world, that's scary. And I think stuff is just overinflated again. And I think these asset bubbles inflated again. As long as the Fed continues to put money in, they'll be able to sustain the market price. But that doesn't mean that it's the true value of that price. So what the hell does that mean? Well, that means that we're probably on a path to even a steeper, definitely a steeper recession than we planned for, right? And then with the more and more and more and more printing of money and the artificial inflation of things, we're definitely on a plan for higher inflation. And there's no way around it. I mean, Ray Dalio's interview recently said that we have business cycles and we have credit cycles. They're all apart roughly 5, 7 years, 10 years. And every 70 years, you have like a currency thing and a currency crisis. And that, 60, 70 years or 80 years. And I guess in the ascent of money, they talked about that too. So we've been blessed to have the dollar as our power. But I think it might, if we don't act the right way, there might be a high chance that our dollar loses the world reserve currency. So what does that mean? That means America is going to lose a lot of clout in the world. And this is going to be an opportunity for another superpower to step up. But what does this mean for us and our pockets at home? If you got cash, hold on. Like I said, things might get more expensive in the short run, such as milk and bread and water and whatever. But if you're sitting on $50,000, $100,000 and you're, saying, what, we could hold on, we'll be able to weather through this time, then over in the other side of this, once things neutralize, you're going to be able to pick up great deals. Like I said, this is my opinion. It could be the total opposite where they can neutralize things and things just stay steady. And then in 2-3 years, boom, the market's back up again. That's wishful thinking. But then again, this is uncharted territory. This has never happened before. I've never seen, at least, definitely I could say in my lifetime, I've never seen, or what I've studied so far, like something go like especially a commodity like oil go negative. I might have to go look back to maybe like early World War I, maybe. This is the lowest oil has been in 21 years. So you're talking what, like 1999 time? And now with the price where it closed at the end of the year, I'm not sure. Maybe less than the 40s. I don't know, man. Like I said, I'm still trying to wrap my head around this. And like I said, with that being an indicator of how an economy is going to grow and the demand of the economy growing, it kind of worries me to make any type of investment right now. So yeah, I'm parked in cash. And no, cash is not trash. Cash is not for fools. think of it as an open option. You're waiting for the right deal. I mean, like we said, dude, at the end of the day, stocks and business and everything, is you just have to be patient. You have to wait for the right deal. Just like if you were dating a significant other, you wouldn't just get married to the first person you kissed, right? Or the first person that you liked or had a crush on, right? I mean, maybe your life does turn out great, right? But chances are probably not, right? Because you're gonna have to take time to know that person and then figure that out and then see if you could see the future with them and whatnot, right? So you have to practice patience. Same thing goes for investing. Is if you're looking at a stock, you're looking at a business, you're looking at whatever, you do your time, you do your homework, you go on dates in a sense where you wait a few weeks, you wait a month or two, and you figure out like which way the patterns are going. You listen to the friends and the family behind that person that you're trying to. The best example I can give, but like their friends and family being the board of directors, the stockholders and the analysts, just saying what they're saying about that company, or the business you're buying. You listen to, so if you're going to go buy like a farm, you'd probably go listen to reports done and studies done in the area. You'll probably ask for tax returns. You know what I mean? You'll do your homework on it, and then when you're ready and you feel safe, that's when you pull the trigger. So for me, the whole oil thing dropping below, I think it's setting us up for a pretty big correction, and I will not be surprised at all in the slightest bit by the end of June that we see anywhere a 10% downward turn in the market and above. And as for real estate goes, real estate's lagging right now, so this is on the tailwind. But as these escrows get hold up, these deals get hold up, money starts drying up, and then people are going to start needing money for their main businesses or for other ventures, or things are going to start coming up. I wouldn't be surprised to see real estate prices fall, but I don't project real estate prices to fall until like August. I think we're going to have to bleed out until at least August to be able to see things drop. And why August? Why that month? Because I feel like that would be like close to, you know, uh, a little bit around the halfway point of from when this kind of started from home in February. So 6 months, and it gives us kind of like that August, because you're starting November, sorry, September, October, November months, right before the December month. Those start giving us, that month is really critical. It starts giving us a forecast towards the end, and plus Congress goes on break. So any kind of legislation that was going to be passed, or extreme legislation before, it would have happened then. So when they go on that like Christmas break or whatever towards the end, that week when there is no regulatory body right away to shove stuff down and something happens, we'll be able to see. So probably towards the end of August, actually, to be more accurate, is when I'm looking at seeing, okay, what is the price is going to start to reflect. So there's a reason why Chase Bank is asking 20% down now instead of helping people finance through it different ways. They want to start levering up their books in the right way. I don't know, guys. I hope this video was somewhat helpful. If you guys want any more feedback on something, drop it in the comments, and we could go from there. And hey, thanks for paying attention, paying attention. Thanks for watching. If you can share it with one person, that'd be great. Help the channel grow. Thanks.